The Russell 2000 up just a fraction at 433.28, and the Amex index up 970 at 786.67. 30-year long bond was only up about 1 or 2 ticks. Long-term interest rates back down a bit to 5.66%. Doug Cease rejoins us now, deputy markets editor over at the Wall Street Journal, to give us some more perspective. And you and I were talking earlier about the lack of any other really viable alternatives as investments if you want to get a decent return. But then the issue of pricing power comes up.
That's right.
And whether or not there's any more of that left.
Well, one of the things I think would be interesting to look at this point is a graph of the Dow for the last for the first part of this year, and look at that against a graph of the emerging markets, Morgan Stanley emerging markets, and you'll see that the emerging markets are just going through the roof. Now, what this tells us, at least in part, is that the global economy, which has been in a slump now for 2 years, ever since Malaysia defaulted, is beginning to recover, and the markets think that's going to continue. Well, if that happens, then some of these basic industries we're talking about, the ones in the Dow, are going to begin to recapture some of the pricing power that they haven't had now in who knows how long.
And does the market smell that?
I think the market must smell that. I mean, if you look at those two graphs, they're both going up in the same direction. Yeah. It doesn't look like there's much overlap between the two, but the fact is that if the global economy is recovering, then you're going to get some pricing power in the commodity side of the economy where there has been none for a long, long time.
Is that, therefore, then inflationary or not?
Well, that's the question that you've got to ask yourself. Sure, if oil prices are up, natural gas prices are up, you start to see some of the commodity prices rising. At some point, that's going to show up in the producer price index. If it shows up fast enough and hard enough, that's going to at least raise some thoughts in Mr. Greenspan's mind about what he needs to do about this, if anything. Now, he's been very good about it so far, and he certainly has been largely responsible, I think, over the long haul for this very substantial and prolonged bull market. But at some point, he's got to call the tune as he sees it.
Right. What about the earnings scenario? I mean, what was it? A couple quarters ago, we were hearing some of the estimating companies saying don't expect the kind of earnings results that we've had in the past. We're going to be well off of last year's results quarter to quarter, and that we've seen a lot of upside surprises.
We certainly have. I mean, you look at, I think it's 28 of the 30 Dow stocks are up over the estimates by about 14%, which is a huge margin. What you've got to remember is that those estimates were reduced at the end of last year when it looked like we were still in this slump and that the economy is going to be slowing. Instead, what we have is an economy that is accelerating. It's pushing those earnings up. I think you're going to see analysts revising earnings upward for probably the rest of this year.
All right, Doug Cease, stay with us. We're going to be back with more with Doug throughout our special coverage. We'll take a quick break, and then we'll take a technical look at this market. How did the charts look in the wake of this market milestone? And we'll talk about the role, Doug just mentioned it, Fed Chairman Alan Greenspan. What role has he played in this bull market? A lot of people agree with Doug and say that he has been largely responsible for the run-up, but is he a reluctant bull? We'll take a look at that and much more when we continue our special edition of CNBC Dow 11,000 in just a moment.
The AIM investment.
Well, it was a squeaker, but history was made on Wall Street today. Joining us to talk more about that is Liam Dalton. He's president of Axiom Capital Management. He joins us now from New York to talk about this new milestone. And Doug Cease, deputy markets editor of the Wall Street Journal, will be participating in that as well. Gentlemen, thank you again for joining us. Liam, good to see you.
Hi, Sue.
So your thoughts on this day?
I think you're in the middle of a major portfolio shift for managers who manage equities in the U.S. You know, we got to remember there are more funds in the U.S. equity market than there are actual stocks, and over 60% of those assets in those funds are multi-sector, meaning they can shift around. And I think what happened a couple of weeks ago when these cyclical stocks popped is there was an initial reaction of, is it going to be something that lasts and continues? Now we've seen, as of last week, that these gains did hold, and now you're getting continued money flow into these sectors, and it looks like we're simply in the midst of what is a major shift in asset allocation for the U.S. mutual fund managers.
Liam, we're seeing this certainly in the cyclical stocks, but what's happening with the small cap stocks? They, too, have been lagging badly. Is this a chance for them to finally catch up?
You know, there's a chance for it. I think that what's really required for the small caps to start up is a stronger economy. I mean, we have pretty good evidence that the economy's humming along right now, but to really get the confidence up to buy those stocks, I think you need very, very strong evidence that the economy is going to really move and give investment managers more reason to seek out some of the smaller fish at the bottom of the ocean. That's where they've been most of this past 2 to 3 years. But overall, I think there's enough merchandise in the mid and large cap areas that should keep most of this big mutual fund money swimming.
Liam, you mentioned the shift, if you will, into this new sector of stocks. Do you agree with it? Do you think it's a correct move? I mean, are you making similar moves, or are you looking in other directions?
We're making similar moves simply because, you know, we simply try to own merchandise that's outperforming the S&P 500 as a whole, and statistically that's what's happening right now. As far as where the danger lies, I think somewhere out in time what you'll do is you'll elevate expectations to a point where it'll be tough to go beyond that. But as a mutual fund manager, you love to work off of a low expectation base, because then companies have an easier time making their numbers and continuing to surprise Wall Street in a positive fashion. If the expectations get high and the stock prices chase those expectations up, then you set yourself up for potential disappointment. But for right now, the earnings power seems to be there, and the Fed is on hold.
On that note, Liam, good to see you again.
Thanks, Sue.
Liam Dalton, president of Axiom Capital Management. He joined us from our Midtown Manhattan bureau. All right, we will take a quick break once again, and then we will continue our special coverage, Dow 11,000, how we got there and where we go from here. We have a lot ahead for you. We're going to talk to economist Diane Swonk about what the Fed chief thinks about this and where stocks are headed at these dizzying levels. And then we will speak to Ryan Jacob. He's the fund manager with the Internet Fund. Internet stocks noticeably missing in today's market rally. This is a special edition of Market Wrap, Dow at 11,000. I always want to say 10,000, but nope, we're past that. It's Dow 11,000 right here on CNBC.
From CNBC is special coverage of Dow 11,000. How we got here.
Welcome back. Well, one of the reasons that the Dow soared to a new high today was the release of an economic report which soothed investors' inflationary concerns. The question is, will the market react favorably to the employment report, which is due out this Friday? Joining us now from Chicago is Diane Swonk. She's Deputy Chief Economist at Bank One Corporation. Good to see you, Diane. Welcome.
You too. Thanks.
Early this morning, we basically got the National Association of Purchasing Managers report, which I guess if you're a stock market investor was not too bad. If you were a bond market investor, you were worried about some inflationary pressures. How did you read it?
Well, you know, first of all, this indicator is imprecise as they come. This is an indicator, of course, that showed a lagging economy over the last year when, in fact, we know that growth accelerated. It does reflect the performance in the manufacturing sector. It did tell us that the manufacturing sector continues to firm, although, you know, it's not soaring anywhere quickly. There also was the sharp uptick in the price component. Even though it's still below 50, it's now nibbling at 50, suggesting that some of the input costs here are starting to rise a bit. This is a diffusion index. It's very highly moved by things like oil prices, and the fact that oil prices are settling back into more reasonable levels is pushing that price component up very dramatically. It's something that should disturb the bond market. It will disturb the Fed much less.
That was my next question, is how is the Fed going to read that? They are sensitive. A number of the Fed members who are granted hawks on inflation anyway might really view this as a danger sign.
Well, I think their real concern is the strength in consumer spending that we've seen out there, the persistently tight labor markets we've seen, and that eventually that'll result in wage push inflation, which we know, although it's slow, is inertial once it gets started, so they're afraid of getting behind that curve. With that said, they know that we've had a lot of temporary effects out there. The temporary good news on inflation from oil prices, that's unwinding, but that is something the Fed tends to look through. Frankly, I think the Dow 11,000 will probably catch a few of the Fed FOMC members' attention at their next meeting. I don't think they're going to move off of it, but many members within the FOMC have been concerned that the Fed on moral hazard out there, that the Fed is managing the downside on equity prices and perceived that way, when I don't believe they are actually, but the fear is they're perceived that way and that they're not managing the upside.
Everyone that I talked to today was referring back to Mr. Greenspan's comments of more than a year ago, the irrational exuberance comment, which threw the market for a loop. And at that point, we were several thousand points lower than we are right now in the Dow Jones Industrial Average. You mentioned some of the concerns by Fed members. Do you think Mr. Greenspan will be one of those who's concerned about equity prices?
Well, I think the Fed has never targeted equity prices in the past, although Japan's memory on their bubble market economies is too recent for us not to at least acknowledge a risk that may come from high equity prices and extraordinarily buoyant equity prices. We've known as well, just from those comments, that the Fed can't just jawbone down the market. This is something they need to actually act on if they really want to manage it. I don't think they're going to get to it yet, but it clearly is on the radar screen. What we did was the Fed shored up investor confidence last fall and eased into an accelerating economy. Created a lot of liquidity, had to go somewhere. Some of it has ended up in the markets. Now, that's not to say that this market doesn't have some fundamentals behind it. All those upside surprises on profits are important to note. This economy continues to generate productivity gains and efficiencies that we didn't once think possible.
Diane, we have to run. Thank you so much for joining us.
Thank you.
Diane Swank, Deputy Chief Economist at Bank One Corporation from Chicago. We will take a quick break, and then coming up, where were those internet stocks today when the Dow hit 11,000? Seems as though they might have slept through today's rally, perhaps, and there was also some profit taking in a number of them. Joining us next is Ryan Jacob, fund manager of the Internet Fund. We'll get his take on that sector. It showed a lot of weakness in some cases today. In other cases, a little bit of strength. We'll talk about all that as we continue with this special Dow 11,000 right here on CNBC. And to investors. But today might have been a little bit of a different story. Joining us now to talk about that is Ryan Jacob. He's fund manager of the Internet Fund. Ryan, thanks so much for joining us. We appreciate it.
Thanks for having me, sir.
I'd like to get your take on the lack of participation in some cases of the Internet stocks in today's move to 11,000. Now, there are those who are worried that the Internet run is over.
Well, we've had a great year so far this year, and it's not terribly surprising now that we're past all of the major internet companies reporting their first quarters that we'd see a bit of a pullback here. It's not too uncommon to what we saw in February, which really was a down month for many internet stocks.
Ryan, there was also some talk, though, about the move into the cyclicals, the rotation out of one sector of the market, the internet's namely, and into what has long been a laggard area, which is the cyclical stocks. Do you think this is going to stick or not?
Well, I mean, you couldn't get two more diametrically opposite groups here, and there could be a little bit of truth to that. I think it's a little too early to tell whether or not this is going to be as major a shift as some people are saying. But clearly, we're going to go through a period now over the next 4 to 6 weeks where, absent the AT&T Media One situation, there's not going to be a whole lot of catalysts to really drive this sector.
Ryan, if the stocks of the internet companies continue to fall as they have in the last couple of days, what is that going to do to the mood of the retail investor who's been such a powerful force in the move up so far in the internet area?
Well, it's tough to say. I mean, we can look at what happened last summer and early fall where our fund, for instance, lost about half its value from peak to trough in a very, very difficult environment. And we actually didn't see as much in terms of outflows of our fund as we anticipated. Whether or not if we go through a sustained period like that now, it's tough to gauge. But so far, we've been very heartened by at least our investor base.
Well, one of the things you said earlier was that the two groups that have moved, so diametrically opposed, the cyclicals and the internet stocks.
Sure.
It isn't really conceivable, is it, that you'll have a lot of those retail investors running to buy Alcoa, General Motors, International Paper? They just don't seem to be of that mindset.
Well, again, the internet is something that touches, everyone's lives on a daily basis. So they're companies that they're familiar with, they've used in the past, where maybe they don't see an Alcoa or an International Paper or some of the cyclicals. You're not going to see that same type of individual trading mentality.
Ryan, thank you so much.
Oh, no problem. Thanks for having me.
Ryan Jacob, fund manager of the Internet Fund. And that will do it for this first hour of our special Dow 11,000. My thanks to Doug Cease. I'll see you again at 6 p.m. Eastern Time. Let's go over now to Ted David. Ted?
All right, Sue, thank you. Just ahead in the next hour of our special Dow 11,000, the bulls kick it into high gear with Dow 11,000 now on the record books. Where do we go from here? We'll get some answers and the closing numbers. Plus, today's market-friendly economic numbers help push the street to its latest milestone. Can the economy keep up its stellar performance? We'll check in with Kathleen Hayes. And then, with the bulls on fire, what's Bill O'Connor of the Marshall Large Cap Fund have to say? We'll find out. Hour of trading, the Dow Jones Industrial Average finishing today's trading session up 2.25. points to 11,014.69. It took just about a month to go from 10,000 to 11,000. We'll have all the numbers in just a moment, but first, let's introduce our co-host for the hour, Mike Holland, chairman of money management firm Holland and Company. What do you got to say about this action?
I knew it would happen.
But this soon?
In my lifetime. Actually, today was wonderful because it was so broad. And as people have been complaining for the past couple of months, it had been so narrow, so narrow. Today it was right across the board. Small stocks, cyclical stocks, technology, everything went up. International oils, it was terrific. But I think it has a lot to do with the economic numbers that are coming out of the other parts of the world. So I don't think it's a surprise given the turn that's occurred in both the Pacific Rim and in Latin America.
People wonder about sustainability, and at what point does this house of cards perhaps come tumbling down, if it's a house of cards?
I don't think it's a house of cards. We have what continues to be the best of all worlds. It's continuing low inflation, and we're getting better stuff out of the one-third of the world which has been sick. And we're talking about Japan and Brazil, to name two.
All right, Mike, don't go too far. You're going to be our co-host for the hour. We'll come back to you in a little bit. Maria's got all the numbers for this incredible day.
Thank you very much, Ted, and it certainly was a remarkable rally for the Dow today. The Dow needed 210 points to close above 11,000. No problem. It gained over 225. The Dow Industrials today finishing at a new all-time high of 11,000. Obviously, this is the Dow Transportation Averaging, flirting with a new high, up 49 1/3 points to 36.96. A different story for the NASDAQ Composite as the internet stocks continue to give up some ground today. The index did end off of its worst levels of the session, but still on the downside by 7 1/4 points to 25.35. S&P 500 today up 19.5 to 1354. Overall, another historic day on Wall Street for the bulls.
It was just over 1 month ago that the hats were flying and the presses were hot, with headlines dominated by Dow 10,000. Today, just 24 trading days later, the Dow Industrials have cracked yet another new milestone of 11,000.
The exuberance in the market is getting something that I'm very uncomfortable with. I've never seen anything like it. Then maybe you should have a young person run your portfolio because they have no fear. But I am getting scared that there's seemingly indiscriminate buying going on. And we're getting to levels where the danger signs are starting to flash pretty bright to me.
Economically sensitive stocks led the Dow to the record. Strong paper stocks such as International Paper up, and oils such as Exxon both up nearly 4%. Goodyear Tire and Rubber gaining 6.5%. And by the closing bell, early weakness in financials had completely reversed. Money flowed into brokers and banks.
I think this is all part of the leadership change, as you say. I think the cyclicals being out, or being in rather, or maybe it's more value being in, and technology or some of the growth, at least temporarily taking a back seat, is part and parcel of the recognition among investors that earnings momentum is now rising.
And during a week that several gaming companies are reporting earnings, investors took a gamble on gaming stocks. And it turned out to be a jackpot for Circus investors. The stock up over 23% after pre-announcing better than expected earnings in the first quarter. Circus predicting earnings of between 40 and 42 cents a share, citing strong occupancy rates, room rate increases. Analysts at Merrill Lynch, CS First Boston, and Robertson Stephens look for the stock to trade to 29 and look for stronger earnings throughout the year. MGM Grand and Harris following suit, up between 9 and 11%. Oil's also pumped up today. Exxon, Chevron, and Texaco all up between 2 and 4%.
And checking how some of the Dow movers fared today, as you can see, strength across the board. The best performers, General Motors picking up more than 4, 3M also higher by more than 4. Gaming stocks also on the upside, as you just saw, big gains across the board, but the best performer there, Circus picking up 4 7/8. Oil stocks also on the upside. Arco beat its first quarter estimates handily. As you can see, the stock doing well today. Paper stocks also on the upside across the board. The best performer, Champion, picking up more than 5. But the internet stocks were weaker. Technology pretty much the weak spot in the day on Wall Street.
And the other big story today, the bidding war for Media One. The cable company is accepting AT&T's $55.8 billion takeover bid, calling the cash and stock offer superior to a rival $48 billion bid from Comcast. Now, Comcast, meantime, is having trouble finding partners to sweeten its offer. It had been seeking alliances with Microsoft and America Online, but as our David Faber reported, AOL is bowing out of any potential deal. Here's a look at how all the major players fared in today's trading session, and all were lower with the exception of Comcast, which rose 3 1/4.
And now that AOL has bowed out of the bidding, what is its long-term strategy? It has become a bitter enemy to AT&T as that company moves ahead as cable with its #1 wire of choice. Hampton Pearson joins us live from a day trading center in Arlington, Virginia with that part of the story. Hello, Hampton.
Hi, Maria. Right you are. We are live at NetTrade, a day trading firm in Arlington, Virginia, just across the river from the nation's capital. And as you might suspect, the news in that favor report that AOL was bowing out of the bidding for Media One was big news for day traders here as well.
Welcome. With America Online dropping out of the bidding.